taking note of something very important here. When we get started, the we really need to know wherever price is on whatever day that you're working with. The things you wanna the things are sorry about that. The things you want to take note of is the last month close if the price is near it, because if price breaks the month close, it's gonna have to break the week, the prior day close as well. So close and the prior day is open, because those areas are going to be areas of support that will be broken on the way down. Each time it breaks a support, it's highly possible that it's going to be very profitable. But for instance, if you look at this was June, July, August, September. In June, price never really break the top or the bottom of the prior month. So it was basically just playing going back and forth. When they do that, they're making a lot of money because they're just consolidating, going back and forth. They're not making new high. They're not making a new low. And then in August they go up. They took out the high. What was this? They took out the high of the month of May. Now, when this price was going up during that 4-week period, it had to break the high, the open of the prior month, the open of the 2 months prior to that, and it went on to break the open of 3 months prior to that and the high of 3 months prior to that. So you see what's happening here. And then after it broke this last green month high, it reversed and came all the way back down into the prior month, about, I don't know, 40 something percent, not quite 50% of that. Maybe it's 50% of this one, but it's not quite 50% of this one. And then after they did that, they did something similar all over again. They went back up, took out the open of this month, prior month, which this month is September. They took out the open of August, and they just stopped shy of the open of July. And then they went all the way back down past the open of September that month and just took it all the way down for negative 38. And where did they find support after that? Well, they found support right at the high of September 2020. I mean, this is kind of unusual. To get a better, stronger idea, you'd probably go to a week chart to see why they stopped here. There's a reason for everything. So as we go on, we're going to look at that as well. Now this month, the month of October, is doing the back and forth thing again. We got a doji like this one, but they're trying to decide if they want it to be a green doji or a red doji. But they took out, came all the way down yesterday. They crashed it down to the 340s. 348. Crazy. But they came all the way down here into last year's September, October. They're going all the way back to the last year, September and October. They actually cut into September, October downward the movements. And they found support somewhere in there. So let's go to the week and see where they found support on for 348.11. Now we're on a week chart. Let's see where they found support. $348, 348.11. So you see they found support somewhere in here. It's probably this candle. Let's see. 348.65 on the open. So they found support in this area right here. And that is the open of a red candle. I'm pretty sure if we go to a lower time frame, we'll get a more specific idea of what open they use as resistance. But it's going to be somewhere in this area, somewhere in the month last October. You see, as we're breaking it down, we're finding out that they went back into last October's numbers 1 year ago. I guess something was left unsettled there last October. And they've been doing the same thing in the last couple of months, because September numbers were here, 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 and here. So it's important that you mark your resistance, which is going to be the days open, the week open, the month open, the day close, the week close, and the month close. You want to have all that information on your chart, because those levels are going to be vital to you understanding the price movement of the stock that you're working with. Also, you need to mark on the 4-hour, the open and the close. Especially when it comes to the 4-hour pre-market levels. Once that pre-market level on the 4-hour is broken in either direction, it's a high possibility that it will travel in that direction. You know, you want to mark on the 1-hour, close on the open on big candles. 1-hour big red candles open price could be a big support, and that's, I'm talking on the look back. You're looking back into the 1-hour. Let's go there. So we're looking at the week. Now we're gonna look at the day, and we're gonna mark the days. See this? Oh, come on. So this was yesterday's open here, and yesterday's open was down here, I'm sorry, and the close was up here. So when the market started today, it opened here, which is a gap up. It came back and closed that gap and passed the close, the high and the close. You see it passed the high. That's the first indicator that it could be going down. Passed the high of the previous day. Then it passed the close of the previous day. And now we're pushing into it. This is probably a low of maybe 40%. But it's also the high of October 12th, which was a red day, 2 days ago. So it don't want to pass the high, the open, or the close from 2 days ago. Sometime it do. Like here, you can see here we had 3 candles here, a 2 up, a 2 up, then we had a 2 down, and then we had another 2 down, large day. But on this day it gapped down and went way below 3 days to stop at the open of 5 days ago. So you see how open and close on the day and the week and the month is important, because it's a repetitive habit of the stock market, using open and close of prior days and weeks and months as major support and resistance. So if you had been trading on this day and you had this number from 5 days ago, you want to go back, as I said, to the closest price, wherever the price is. Like for instance, you know that it opened early, 4 o'clock in the morning, and trading starts. You're gonna go to your daily, weekly, monthly charts, and you're gonna say, okay, well, since price opened here, let's see what we got here. In that era, what do we have in the past? We have a close here, which you're gonna mark as a support level, and then you have an open here, which you're gonna mark as a support level. So if you see your price is going down when the market opens and you can trade, and it's going down and it passes the open of this green day, the close of this green day, more than likely it's going to maybe challenge. The next challenge is going to be the open of the day prior to that. Now don't go making it all complicated by saying, oh well, what about these candles back here? Well, you want to start working with the days that are closest to your price action. These are a lot closer to this day than these days are. So you're gonna start working with these candles first. Don't worry about what's back here. Worry about what's gonna break the most recent days. It's gonna break the support or the open and close of those days. All right. And the 4 hour, we're gonna do the same thing. You're gonna look on the 4 hour, you're gonna see that it's the same thing all over again. Okay, size of that wick. So yeah, you're gonna do the same thing. You know, this is your 4 hour I was talking to you about a little bit earlier. Now this starts at 4 a.m. and this starts at 8 a.m. The market opens at 9:30. So if that's the case, you're gonna come mark off your levels on the higher time frame. Then you're gonna come to your 4 hour, and you're gonna mark price opened here, right? But it's green because you see this long red line going up next to, above this. That's going to be green before it turns red. It has to when it turns red, it has to pass the number that it opened at. It has to pass it, and then the candle will turn red. But before, this candle was a big green candle, and then it turned red. Now, if when this was green going up, you could have gotten in here when it passed the open of this 4 o'clock candle, if you had marked it, and then you could have taken your profit. See, this would be the next level. You see this? You go all the way back, There's nothing here. The first one here, bottom of this first candle, would be your first line of resistance. That's right. The bottom of this one would be your first line of resistance. And then, as you can see, the close of this day is also going to be important. So you'd mark that as well. Or you'd mark the bottom of this green candle too and the close of this one. Because that would be your next level that it might stop and return on its way down. So yeah, so you see here, and now price is going down and it's finding support where? Well, you would have had lines on the chart already from your month, week, and day. So you would have had a line somewhere around here at the open. But you would have had a line here to open at this big candle for sure. And then a line here, the next one down on the open here. This is also going to be a major area because it has open and close. And you'd mark that as well. And then you do the same thing going backwards from your month, week, days, 4 hour, 1 hour. On the 1 hour, now you're going to see where big candles, the high of big candles are very important. The open and the close of these candles are very important. So the open of this is going to be a very good support. As you can see on this candle right here. See that? The open and the close of green candles and big red candles is good support for your price action on the 1 hour scale. And you can even find it on the 30-minute too. But we're gonna stop here on the 1 hour and continue. I'm gonna load my chart with some stuff. And this is Fibonacci levels, which is something we can talk about at a later date. Fibonacci levels can be used as well. But more importantly are your levels. See, your 4 hour low. This is a 4 hour target in 1 hour. Well, it's a target for 1 hour, sorry, and this is a 1 hour level, a 1 hour level. You see, this 1 hour level in the week is the same. So that's going to be an important level. On the month, and the 1 hour level again is the same. That's an important level because you can see both these candles didn't want to hold below it. You don't want to hold below it. You have yesterday's open way down here. So yeah, you gotta mark these levels. And this is your week target, which would be the close or open of last week. And this is at a 1 hour target. These lines I have here that looks like a horn, a megaphone I should say. She's showing what they call a broadening formation. Mr. Rob Smith created this trading system called a strat. Rob Smith. He's very good guy. He has a system where there's only 3 types of candles. Candle number 1 would be an inside candle, which means it stays inside of the candle prior to it. Let's see if we can find one I can show you. This would be considered a candle number 1. Don't look at the color, look at the candle. If you notice the height of this green candle right here, and the low of it, the high of it and the low of it is a lot more than the high and the low of this candle. So on this day, there was no volume to move it high, there was no volume to move it low. So it stayed there and sat around and did nothing. While they're gradually eating away at everybody else's contracts. Anyway, that's the number 1 candle, according to Mr. Rob Smith. This candle would be a 2 down. It didn't break the high, it broke the low numbers of these candles. So this would be a 2 down. On this candle, this would be a 3 actually. Why would this be a number 3? So we discussed a number 1, a number 2. There are more than one type of 2. So this is a 2 down, this is a 2 down, even though it's green. This is a 2 up. Why? Because it went higher than the previous day. So it's a 2 up. This is a 2 down. Why? Because it went lower than the previous day. This is a 3 because it went higher and lower all together in one candle. It went higher and lower. So this is a number 3 candle. And that's it. You got number 1 candles that are inside. Like I showed you, inside. It didn't break the low, didn't break the high. You got a 2 down candle. It broke the low and went down. This is a 2 down candle. It broke the low and went down. This is a 2 up candle. It broke the high and went up. This is a number 3 candle. It broke the high first and then went down past the open, turned red, and went all the way down here. So it broke the high and the low of the last candle. So that's a number 3. All right, and then now your job is to just look at each candle and see what they are. So if you start here, this would be a 2 up, a 2 up. This would be a number 3 because it broke the high and it broke the low. When you have a candle that starts this way, it's important that you pay attention because it gives you some good clues. It went up, it broke the high. So now it's a 2 up. And then it came back down and went red. And went past the open of the prior candle. So now this has a potential to be a 3. And it turned out that it had a great potential to be a 3 because it went all the way down here. So if you had taken this trade right as it broke the bottom of the number 2 high, you would have made some serious money. So this is what they call price action. You're watching the movement of the price, the action of the price. So you had a 2 up, and then you had this candle that started as a inside 1 because it didn't break the high or the low. It can't break the high or the low when it opens in the middle. It has to go up, way up first, and then it stops at some sort of resistance point, which we would have had marked out. And then once we mark that as resistance and it's moving away from our resistance and it breaks the open of the next candle that's next to it, you're getting in that trade. But there's a high possibility that it will continue to go down. Remember, it worked hard to get all the way up here, and it came back to where it opened and passed it. So it had no respect anymore for that open price. It went up. It says, I don't respect your high of the previous candle. And then it stopped because it respected another high somewhere or another low somewhere, and turned around and says, I don't respect the number of the open candle. And it says, I don't respect the low of this candle, and I'm going to keep going down. So that's what price movement does. It moves up, it moves down. This is a live feed actually, so look at this candle. What's happening here? It went up about 50% into this candle, 40%, maybe 45%, and now it's going down and passes the open. It says, I don't respect the open number here. So when this thing went up, it was green. And now that it came back down and passed the number that opened at, it's now red. So what does that tell you? It opened here, went up. Buyers are buying. And it stopped here, 40% into this candle, or the bottom of this candle. So that tells you something. It tells you that there is some sort of level here where sellers will kick in. That's exactly what they did. And the sellers kicked in and took it back all the way down past this point. So if you think about it, if it's open here, went up, that would be, and stop here, it would be 100% movement. And it came back and took that 100% and continued downward to make it 100, almost 200% now. So if you buy your contracts at the right time, when you have your levels marked out, you could bank 100% on your money just with that move just as well. And it's even going to go for more because it's going to break this level. So where's your next level of support? That would be here. These two big candles right here, the open and the close. If it breaks that, we got something maybe very good going on here. Let's see if it's going to do that. We'll wait a few minutes and then we'll keep it moving. Well, it doesn't look like it's going to break it today. There's nothing aggressive happening here. It's just meandering around, not doing anything but take people's money. Those who don't understand. A lot of winners and losers with every movement of this price. So depending on which side of the fence you're on, you're either making money or you're losing money. See here, today it opened. Here, stop, came down, and then started to go back up, past the open and the high of this candle, went all the way up here. Then the next candle opened. 9, and it went down. It didn't even challenge the high of this one. So here we had a 2 up because it's higher than this candle from this last candle. This is a 2 up. Then this is also a 2 up. And this right here, remember what I told you what this is? It didn't break the high or the low. This is a number 1 candle. And this here is a 2 down and another 2 down. But if you add all these 3 together, you'd have a big 2 down candle. All right. Now let's go to our 30-minute. See that? We had a doji, and a decision to move price down. So that's how it really works. But let me explain something to you. If you had got in here after this breaks this low, and you would have rolled it all the way down here, if you did not get out here, you've lost almost 40% of your contract. Even though it started to go back down here, not as much volume as the volume of 1.6 million on this candle. See that? It's just 300,000. 1.6 million. So because of this volume, even though they're selling, there's not a lot of sellers, which means a lot of sellers that was in this candle got out. And because they got out, it lowered the value of your contract. So even though it's still going down, you would not have had the same amount of money you could have made here. This is where a lot of people get it twisted on contracts. When it comes to contracts, you have to remember that volume of the contracts make a difference. Don't confuse it with volume. This volume up here is volume of people buying the stock and selling the stock. These are not contracts. So when you see this volume here at 1.6 million, it is a lot of volume, but with this volume, a lot of contracts are also bought. On with the contracts, they have their own volume. But then when the volume slows down, here the volume of the contracts are almost reflecting the same thing, slowing down or almost gone. So even though, for instance, if you bought in here at $100 and you made $300, you would have probably lost $80, even from these 2 candles. Even though this one has passed that area, you still would be less $80. Okay. So we go back to our 30 minutes. Let's see what I got in here. What do I have in here? Well, I have my targets. As you can see, my targets are here. My 1 hour, my week, 1 hour, day close, week open, month open. These numbers are important because I can show you here how they behave to those numbers. You see where I got this sell entry here? This indicator I gotta show you. It gave me the sell indicator as soon as it passed the day close. This is a good indicator. I don't depend on it. I use it as a supporting system. It's HA Strategy. HA Strategy by KRYPT. And this is how I have it set up for this particular chart. You can choose to set yours to the time frame that you use if you're comfortable with that. I also have these, which I like a lot. F full time frame continuity VIP 3RR. FTCP VIP 3RR. And this is of course TradingView. What I have here is a 5-minute, 15-minute, 22-minute, 36-minute, 240-minute, which is 4 hours. Down here I have the day, 2 days, week, month, and 3 months, a quarter. So if you notice right now, most of them are red, but on your 5 minutes, the price is going up. On the 15 minutes, the price is still down, which means whatever price this opened at, it's lower than it was 15 minutes ago. On 22 minutes, whatever price this opened at, it's still higher than the open price. On the 36 minutes, it's down. 4 hours, it's down, excuse me. These colors and numbers, minutes, tell you where the price is according to those time frames, which is what I like. On the day, it's down 2.41%. So that's quite a bit. This is also another indicator here, which I like. It's TC. It gives you the full time frame continuity as well. It's simpler than this. It just gives you arrows and tell you on the hour the open price is below what it opened at. On the day, the open price is lower. On the week, so this is telling you it's in a full downtrend. Full downtrend. So what do you do with information like this? What do you do with it? Well, that downtrend on the month came in when it passed my month open over here. You see my month open line? So if I was looking at this trade prior to showing you all that stuff on the other charts, I would have seen that it's going to pass my month mark. So I could have taken a trade and used what? One of my resistance line that I have in place as my take profit. Well, it's resisting the price to go down, but it's called support line. It's supporting the price from going lower, but it's also resisting the price from going lower. So whichever way you want to use it, that's all in your hands. Now here's another indicator that I have that is pretty cool. This indicator is called Nadarea by Watson Envelope. These are my particular settings. You can choose your own that fits your need. But I know that when price goes outside of it, it comes back to it. And that's why I use it. It goes outside of it and comes back to it. This white line here is just a simple VWAP. And this blue line here is with my HA strategy of my sell and buy labels. So my sell and buy labels. Another thing I have here is what they call a ORB. Whatever price you want to set, time you want to say that. Eastern time, so I have it set at 9:30 for open market. And I like to actually set it at 1800 when in the aftermarket. And it gives me 3 lines. It gives me, 2 lines. It gives me the high and the low. And that's another way I can decide prior to entry This is my 9:30 candle, so this would be my 10 o'clock. And I noticed that my 10 o'clock open almost the same or less than the close of the prior candle. So I could have got in here, or I could have just waited for my sell as it passed my day yesterday close, and I could have bought in there. This is my these numbers here on here: DTR, day trading range, average true range. So far, the stock since it's open is down $10. Now it's different from here. This is $6 because this $6 price is from the 9:30 open price. The $10 price is from the pre-market high, way up there. So from here, 371 down to 359 is $10 and something, 93 cents. Okay, so this is telling you that since today started at 4 a.m. from the high to the lowest price right now, it's been $10. Why do you want to know this information? Because you'll get an idea of how much this stock will move in its trading period. So if you're going to take a trade tomorrow or next week, you know that there's a possibility it can move $10.93 total. You know that the average true range is $9.10 right now. And if you think about it, this average TR is also from the pre-market, because what do we have since open? A negative $5. So your ATR is from your high price as well of the pre-market. So when you have these major candles red, 1 day, the 1 week, the 1 month, we can see them down the 3 month. It's, you see it, or even the 1 hour. This is telling you this is a full-blown downtrend. So you can wait for a pullback. You go to from a 30-minute to maybe a 1 minute. And you'll have your lines, and you say to yourself, okay, it's in a full-blown downtrend. Where can I get in? And what you would want to do is get in where there's a pullback. A pullback would mean that it goes down and pull back up, then goes down and pull back up. You see this? This is what they call a downtrend. And this is where my indicator told me to sell. And here's another super trend. It's another indicator that I have. I believe I turned off a lot of things in here and just kept buy and sell signal. Okay, well, I do that with a lot of my stuff, because I don't need a lot of stuff that they have in some of these things. So that is it for today. Okay, real quick. So yeah, you would enter the trade. I would enter here because it passed my month, and I would wait for maybe a green candle to go back to the month, but don't break it, and then I would enter for a downward movement. And if I'd done that here, I would have made a little bit of money down to this point. But then I would have hopefully captured 360 to 359, a dollar movement, a $1 movement. Alrighty, and that's going to be it. So we got some good support here, hit it here, and it hit it almost here again. So there's a good support system right here. Don't forget to like and subscribe. And if you want more, just let me know. And please hit the like button. Much, much appreciated. I'm really trying to help. And I know that everybody wants to earn some extra money. Nothing wrong with that. But you have to follow rules. Just like you follow rules for everything else in your life. If you develop some rules for your trading and you follow them, in the long run, you will have extra money. So please, the most important thing is following rules when it comes to trading. There's no rush in trading. There's no impatience in trading. It is just a system that's developed, that you will develop, that works for you. I can preach to you all day, but it's going to boil down to your own ability to be patient, to be determined, to not get emotional, and to follow your system. All right. Thanks again. Don't forget to like and subscribe.